A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a significant development, the Prime Minister and Chancellor are contemplating alterations to inheritance tax as a means to bolster government revenue, according to reports. The specifics of how many additional individuals might be liable for this tax, or the financial implications of such changes, remain unclear as the country gears up for the upcoming budget announcement on October 30th. Currently, inheritance tax is levied at a rate of 40% on estates exceeding a threshold of £325,000, which includes property, possessions, and cash left behind after someone's death. Notably, the tax is only applied to the portion of the estate that surpasses this threshold. For instance, an estate valued at £335,000 would incur tax only on the additional £10,000 above the threshold. There are several exemptions and allowances that can mitigate the tax burden, particularly for those passing down homes to children or grandchildren. The tax must be settled by the end of the 6th month following the death of the individual, or else interest charges will apply. Presently, inheritance tax contributes approximately £7 billion annually to government coffers. Recent statistics reveal that a mere 4% of estates, translating to around 27,800 estates per year, are subject to this tax. However, projections from the Institute for Fiscal Studies suggest that by 2032, approximately 7% of estates could fall under the inheritance tax umbrella if current regulations remain unchanged. Interestingly, a YouGov poll conducted in July 2023 indicated that a third of respondents believe they would be liable for inheritance tax upon their death. There are various reasons why inheritance tax may not be applicable, including estates valued below £325,000, assets bequeathed to spouses or civil partners, and donations to specific charities or community sports clubs. Additionally, land used for agricultural purposes may also be exempt. The threshold increases to £500,000 if the deceased leaves their home to children or grandchildren, allowing couples to combine allowances, potentially avoiding tax on estates valued up to £1 million. Individuals can also gift up to £3,000 annually without incurring tax, with the option to carry over unused allowances to the next year, capped at £6,000. Gifts funded from income, rather than savings, may also escape inheritance tax. However, larger gifts made within 7 years of death may still be factored into inheritance tax calculations. As speculation mounts regarding potential changes in the budget, including adjustments to exemptions and gift regulations, the implications for taxpayers could be significant. The Chancellor, Rachel Reeves, has several avenues to explore for increasing inheritance tax revenue, such as raising the tax rate, reducing the tax-free allowance, or modifying existing exemptions and reliefs. While some proposals may target the wealthiest, many middle-class families could still find themselves ensnared by the tax net. The landscape of inheritance tax has evolved over the years, with the freeze on the tax-free nil-rate band of £325,000 since 2009 contributing to an increase in tax revenue. Despite George Osborne's 2007 declaration that only millionaires would pay inheritance tax, the reality is that many estates valued below £1 million are now subject to the tax. The bulk of inheritance tax revenue is generated from estates exceeding £2 million, yet the effective tax rate for the affluent is often lower than that faced by middle-income families. While the headline rate stands at 40%, the actual rate paid by families averages around 20%, with larger estates benefiting from various reliefs. This disparity highlights the challenges faced by families with modest estates, who may not have the same financial flexibility as their wealthier counterparts. The upcoming budget could potentially reshape the inheritance tax landscape, prompting many to re-evaluate their financial planning strategies. As the government seeks to address fiscal challenges, taxpayers are urged to stay informed about possible changes that could impact their estate planning and tax obligations. The intricacies of inheritance tax can be daunting, and individuals are encouraged to seek independent financial advice to navigate the complexities of the system. With the budget just around the corner, the fate of inheritance tax remains uncertain, but its potential implications for families across the country are becoming increasingly apparent. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.